Hello, everybody. John Stone with the Stone's Real Estate team at Century 21. My co-host is Catherine Justice with Gentili Real Estate, and our special guest is Jackie Wheaton from Precision Home Loans.
Hello.
Catherine, what are we going to talk about today?
We are going to talk about interest rates, what kind of loans we can get, kind of give you guys a good idea, a little bit of education on how to get into a home and what's available for you. So the first question would be, everybody's question is, what are interest rates right now? What are interest rates headed toward in the future? And what do we think is going to happen
You did bring
later?
your mortgage crystal ball, right?
Did you?
Yes, I was
Yes.
just going to say. It's actually like the magic 8 ball.
Right.
That, if you remember
If you don't like the
those.
answer, you just shake it
You
again.
shake it
Just
up.
shake it
Sure.
again. Right.
Yeah.
That's pretty much how the market has been going these last few months or a few years, I should say. Interest rates at the moment are really going in between 6 to 6.5, 6.75%. That is without having to pay a bunch of points to buy down the rate. It can get a little bit lower, and we do give you all of those options available, but just the blanket run-of-the-mill is going to be 6 to about 6.75, depending upon FHA or conventional.
Are we going to see 3% interest rates again?
Gosh, don't I
In my
wish.
lifetime. Maybe yours. How about mine?
Yeah, I don't have much left.
Maybe
You?
mine. There's gray hair up here. I just colored it, but we really don't anticipate ever seeing interest rates in the threes again. However, I will say that we didn't expect to see them in the
Fives,
first place
yeah.
either.
Yep, that's true.
So there's really no telling if we're going to see them go that low, and if we do, when it'll be. This year, the mortgage experts are expecting rates to go somewhere into the fives, maybe touching fours on a day or two. But for the most part, you're probably going to be seeing more like low fives to mid fives, and not much lower than that.
Well, that's not too bad, but what if someone didn't like that rate at 6.25 or 6.5? Isn't there a couple options? You can either, the buyer themselves can buy that rate down, or the seller can do a buy down for them, correct?
Correct. So there's multiple ways that you can get that interest rate to be down. Permanent buy down is when you yourself or the seller, if you have seller credit from your negotiated transaction from your amazing real estate agents, if they are willing to offer that, then you can use those funds to buy down the interest rate on a permanent basis. What that means is that from day one, your rate will be the same at whatever you purchased it down to. Now, there's no guarantee on what that is. So it doesn't work that you get 1 point, buys the rate down by 1%. It doesn't work that way. It's really a matter of whatever the cost is on the back end that day. It can vary and tell you that it might be today it's a 0.5% to drop the interest rate by 0.25, and tomorrow it might be a whole percent to drop it by 0.5. Those things are going to vary depending upon your qualifications and where the rates are that day.
So it's just like interest rates. They go up and down every day,
Right.
all day, and
Yes.
you just have to see what it is when you're ready to get that thing done.
And every single customer is different. No one will ever have the exact same structure. Although you might get the same interest rate, the structure on the back end is always going to have a little bit of variance to it based upon your debt to income. So how much income you have versus how much debt you have. And then also what your credit score is, how much your down payment is. All of those things are really factored into it.
So tell me, if I wanted to do an owner-occupied home, what are my options on that, and what would be the minimum I have to put down? Because it's still a misconception that people have to come in with like 10 and 20% just
yeah.
to get
Right.
themselves into a home.
You actually don't. So there's many different variations that you can do. A USDA is 100% financing. Now that is limited to rural areas and certain zip codes. For instance, Hanford, if you're familiar with our Central Valley here, does not qualify, where Armona, that is directly next door, in fact, there's a Hanford-Armona Road,
Correct.
does qualify. So you just have to check the address and see what area does work for you for that. VA is another 100% financing that
Right.
you don't have to have any down payment. And then if you're looking at FHA or conventional, the FHA is a 3.5% minimum down payment. Only half a percent has to be from your own money. The rest can be a gift
nice.
or down payment assistance, anything like that. Conventional is 3%. Now, those are for first-time home buyers. But if you are a move-up buyer looking to sell your home and move into another one, or keep your home and keep it as a rental and move into another, then you can actually get in with 5% down payment. So there's still options for you that does not require the full 10% or 20% down payment, even if you own a home already.
How does the FICO score affect your interest rate, or what other than FICO? What else is looked at to come up with an interest rate for individual buyer?
So when it comes to your interest rate and even just the loan approval or denial, your FICO score is definitely important, but it's not the end all be all. We've had customers who have had a 620 credit score and actually been approved where somebody with a 700 credit score was denied. And those reasons are going to be because of recent lates within the past 12 months, whether it's on credit cards or car payments, rent, anything like that. So it's really an overall assessment of risk is where that interest rate is going to be driven from, as well as your approval or denial.
So someone is checking their credit on Credit Karma, and you run their credit. Are they going to be the same?
I wish that they were. And that's so much of a fun conversation to have
Right.
when it's not. There are many variations to credit scores and the programs that they use. So if you go to buy a car, your credit score is going to be different than if you were to go buy a house. If you get a credit card, it's different as well. There's different models that they pull. So for a mortgage rated credit report, it is actually called a mortgage rated credit report. For that, we take all three scores and we take the middle of those three. That's it. There's no math involved of any kind. It's just whatever the middle score is. And it's, if you have 10 borrowers on the loan and one of them has a 620 and everybody else is 780, that 620 is what we're going to use. So it's the lowest of all people that are applying for the loan.
Okay.
Yeah, so what I call it when I try to explain things to people, I always say that there's a mortgage pool.
Yes.
Okay. And there's what I call a retail. We'll call it dumbing it down because I need that, right? So the retail side is when you get a car, you get a credit card, any of that kind of stuff. To me, what I've seen most, and maybe some of you guys can tell me if I'm wrong, when you pull that credit off of, what's it called?
Credit Karma?
Credit Karma. That tends to be more your retail score.
Yeah,
Yes.
it is. Absolutely is.
So that's usually a higher score than than what you pull for a mortgage.
Yeah.
And so that's the misconception with people. Well, my credit score was this, when in reality, trying to explain that to him does become. I try to help you out a little bit.
Yes,
okay,
I appreciate that. You do.
So do we have any more questions about?
I have one. Are you seeing a lot of seller credits that are going to interest rate, either a 2-1 buy down or a 3-2-1 buy down or permanent buy down?
We've seen very many of them,
Really?
unfortunately. I have, in recent months, in fact, actually in the last 2 days, I've had 2 contracts come in with seller credit on both. They were negotiated in specific circumstances, but it's not regular. We're not seeing it very often because inventory is so low that it's most sellers don't have to give that seller credit in order to help because they have another buyer waiting behind them.
Yeah.
It's as we discussed, John.
Yeah,
the last time we discussed that, and that we're still seeing multiple offers on things.
We are.
So
definitely.
if something's priced right, if it's ready to move into, you've got people that are there, and we're not talking low end. We're talking people in that 600,000 to 700,000 range. We're not seeing any credit back or anything for the buy downs for those. So
what I am noticing is that fast escrows is much more important to a lot of the sellers out there, especially if the home is vacant, than anything else. So we had one that was had multiple offers. 2 offers were waiting for it that were cash, but they were contingent on selling another property. And then ours that went in is a down payment assistance program, but I was able to confirm 21 days, move up the contingency dates as far as inspections and whatnot. And those things were more important to them than trying to have a cash buyer, because cash really isn't king. The only reason people accept a cash offer above is because they think cash means fast.
Right.
But it doesn't.
Not
always.
necessarily, no.
Yeah.
No.
yeah, I always tell my clients, I said, well, you can take cash now, but would you rather wait 30 days and potentially get 20 grand more? Because
and really it's not 30 days, it's 10.
Right.
Right?
Yeah.
So no,
Right.
I'd wait for my
Right.
So
30 days.
with that being said, you guys comment, ask questions, make sure you put your comments in there. We will be more than happy. Jackie will put Jackie's information in so you guys can have that. If you have any, John's rolling his eyes at me because he's the one that has to do this, okay? So I'm telling him what he has to do. But we will get her information to you guys. If you need assistance in getting started on a home, this is the person that you start with.
Yep.
Start with the lender first. We'll be more than happy after that to help you guys and help guide you. And then we're going to next time talk about...
We're going to talk to Jackie about home buying programs, specifically some down payment programs. So
Great.
stay tuned. That'll be out